Yeah, some concern here for Cal or CATL. China is a big LFP battery maker, makes batteries for many automakers. The news yesterday was Tesla's cheapest Model 3 not qualifies for the full EV tax credit.
Look, Tesla has a lead in EVs, a very strong lead, particularly on the mass market side, and they can make money at those price levels.
Gains. Let's bring in Roth Capital's Craig Irwin, $85 price target, neutral rating on the company. What's leading to this surge that we've seen lately, Craig?
No, we're pretty bullish, and we think this rally has more room to run. It's very reminiscent of what happened in 2020. Remember when they were bringing the Model Y out, and that's news. And what it did was it drove a lot of people to Tesla showrooms and to the Tesla website.
Mary, it's Melissa Lee at the NASDAQ market site. How do you share the cost or revenue of the charging network with Elon Musk, with Tesla? And does this mean that you might be partnering in the future? Because Elon Musk has tweeted just recently on the heels of the Ford announcement that he would be willing in the future to license other Tesla technology like full self-driving and autopilot.
As we know, Tesla stock has been soaring lately. Will that trend continue? I don't know. But I know I'm out of my 215 put position that expired on June 9th. I expected Tesla stock to trend lower in the beginning of the week. Theta will already have eaten away most of the gains that I intended. And with the stock hovering around 225, I just figured it was best to cut my losses. Should there be a dip, I probably won't profit off of it, considering I didn't roll my put option. I am at the ready to purchase more stock should the stock price fall. Today we're going to check out some of the mainstream finance news. The Model 3 qualifies for the full $7,500 tax credit. So let's see what they have to say about that. And there's some thoughts on Tesla's current winning streak. Let's get right to it.
Ahead of the opening bell, we got some movers for you. Shares of contemporary Amperex technology, also known as cattle, they fell in the Chinese trading after Morgan Stanley slashed its rating to underweight on fears that Tesla will leave the battery maker in the dust. It comes as the Model 3 is now eligible for the $7,500 tax credit in the U.S., and there are implications for some requirements attached to that credit. Yahoo Finance's Pras Subramanian is here to explain. So Pras, good news, I guess, for Tesla, wannabe Tesla buyers in the U.S., but not great news for cattle.
Yeah, some concern here for Cal or CATL. China is a big LFP battery maker, makes batteries for many automakers. The news yesterday was Tesla's cheapest Model 3 not qualifies for the full EV tax credit. Tesla had used CATL battery cells in the past for the base Model 3. It seems Tesla must have updated where the battery minerals are coming from or increased the value of North American components, which sort of make up how you get the full credit. So we don't know what happened because neither Tesla nor the U.S. government said exactly how they got that tax credit, but it's definitely true that some different batteries are being used here. So Morgan Stanley concerned that automakers in the U.S. will use North American battery makers and joint ventures more along the lines of, let's say, LG and GM and Tesla and Panasonic to take advantage of those government incentives. But we did see Ford sign a deal with CATL, this licensed tech, and make batteries here in the U.S. and Michigan. So they do have some options here beyond Chinese manufacturing.
Well, that's just some knee-jerk reaction. CATL, or cattle. Tesla will not be leaving CATL in the dust. There is not enough batteries on the planet for Tesla's ambitions. I'm not invested in CATL. I don't intend to be invested in any other company besides Tesla. I do know if the stock fell off of the news of the Model 3, yeah, that's a buying opportunity. CATL is going to continue to make as many batteries as they possibly can, and Tesla will consume all of those batteries, not to mention any other auto manufacturer producing electric vehicles. You can't sell every car in the United States. Tesla will continue to use CATL business as usual. Please keep making batteries. We will continue to buy them.
Some recent, of course, new pricing changes when it comes to Tesla in select states. What do we know about how they're trying to continue to kind of bring down the pricing based on tax credits?
Yeah, and I wrote about this yesterday. So that really interesting stuff here. So that Model 3 now, that base version, right, is qualified for that full $7,500 tax credit. But now, if you go in states like California, they have their own $7,500 tax credit. So that brings that base Model 3 down to around $26,000.
What? Essentially, all those tax credits for California, you're basically getting free full self-driving. If you're in the state of California, and you're in the market for a new vehicle, there is no other option besides the Model 3. and you get free full self-driving? Tesla referral link at the bottom. Californians, get your Model 3s now.
Add in other incentives that Tesla is using on a regional basis in California. For instance, there's a $2,000 incentive there. You can get a car for around $23,000, a brand new Tesla Model 3. So a big deal there for some buyers, especially in California for the Model 3.
Yes, indeed. And it looks like, by the way, that Tesla is making new highs for the year here. Had a recent surge that is continuing today. Just checking to see how many days in a row Tesla's been up. 1, 2, 3, 4, 5, 6, 7, 8. 8 sessions in a row going into today's session that Tesla's been on the rise. So we'll see if it continues. Pras, thanks a lot. Appreciate it.
Yeah, it's 9 days in a row now. And by the time this video airs, it might be 10. Huge error of judgment on my part. I thought Tesla stock would fall. Nope. Probably going to continue this. If you follow me on Patreon, you'll probably get more updated news about the stock and its trends. But either way, we're at 9 days right now. California, use the Tesla referral link. People think that this IRA tax credit thing is going to be here well into the end of the decade. I'm here to tell you that the government will not be willing to fund this many tax credits. Of all the tax credits allotted for this bill, which is going to be grossly underestimated, Tesla will assume the lion's share until they start finagling it, or Tesla can't get these credits anymore because they've reached a new cap. Mark my words, there'll be a cap on the IRA. That'll be the best way to go about it, besides removing the entire thing so that other companies like Ford, GM can benefit from these tax credits. And you would think it's going to hurt Tesla sales. It will not. Tesla does not need these tax credits. Their products are that compelling to where they don't need any incentive. Sure, there will be other people buying other electric vehicles, and they'll have their reasons, but people already know that they want the best. They're going ahead and getting the best. So if you've got the funds, or you're in the market for a vehicle or any of these products right now, you better take advantage of the IRA, because Tesla will eventually be scrubbed. It's not a matter of if, only when.
You're bullish just in terms of what these tax credits, what it could do for demand. How big of a bump do you think we could potentially see?
Look, over the last, call it 5-6 months, Tesla has seen some demand issues. They started cutting prices late last year. They enacted 6 price cuts until recently, where they seem to have stabilized that a little with some marginal price increases recently. And this is happening globally, whether it's the US, Europe, China. We've seen general demand weakness in auto and in EVs and in Tesla specifically. It showed up not so much in their unit numbers last quarter, but in their margins, right? The margins dipped below this magic sort of 20% on the growth side that they had talked about and guided to. What this tax credit does is it helps not only stabilize demand, but potentially increase it over the course of the year. They've guided for 1.8 million vehicles. And I think that most people expect them to sort of kind of hit that. But what could help them quite a bit is in their margins, because they could get to this target without having to cut prices further, because frankly, the federal government is helping them do that. And if you think about what it costs to buy a Model 3 in the United States, they're getting a $7,500 tax credit if you meet certain income requirements, which makes these comparable in some states that offer additional tax credits to a Toyota Camry. So really, the Model 3 with multiple tax credits is becoming a mass market vehicle, which is just an incredible thing to see. It around $25,000 if you live in states like California or even Colorado.
Californians, snow bunnies in Colorado, please use the referral link. Grab your Teslas now. These tax credits will not be around forever. But first, on the subject of demand, I'm going to tell you right now, Tesla is not experiencing a demand issue. The entire automotive industry is experiencing a demand issue. It's cyclical. Not to mention, we have macroeconomic pressures induced by the Fed rate hikes and ridiculous inflation. Combating those two are leaving consumers in the lurch. Nobody wants a $1,000 car note, and that's what you're essentially getting with these rates. So more prudent buyers of automobiles are holding and not opting to get the car now. Just because automobile purchases are being suppressed by the macroeconomic pressures does not mean that demand has ceased all of a sudden. In fact, I would wager that demand has seen an incredible increase.
I was adding up those tax credits today as somebody who lives in California. It is a huge, huge discount when you think about it. But Tesla's not the only car maker, at least in the EV space, that is getting that kind of sort of double credit, right? That the federal tax credit as well as whatever the states are offering. How do you think Tesla competes in that environment when things are becoming increasingly crowded in the space?
Look, Tesla has a lead in EVs, a very strong lead, particularly on the mass market side, and they can make money at those price levels. I mean, look, we cover a company called Rivian that's a competitor, but they have a niche product, a very, very good product with a high-end SUV and truck. Those don't qualify for these tax credits, but this is a completely different marketplace. And the GMs, the Fords, we don't cover them, but at this particular price point, it becomes very hard for them to make money in this $20,000 to $30,000 range for EVs. Tesla can do it, and it's really their ability to have full vertical integration that's allowed them to do that. They make battery cells. They even mine and process materials. They have this autonomous driving software called FSD that can add to margins. I mean, the way we think about their business, it's razor blade, meaning that they sell these vehicles at a 20-ish% gross margin, and they hope to penetrate and get additional high gross margin software sales over time through adding on full self-driving. Now, right now, it's priced at $15,000 for that option. We think it's very, very compelling, but it's getting a lot more expensive, particularly relative to the price of the car that seems to be going down in price, either through Tesla's works or through federal tax credits. So we're advocating for a price cut for FSD from $15,000 maybe to the $10,000 range. But that really helps their margins over the long term.
Well, Tesla's not going to take that advice. Tesla is not going to lower the price of their FSD software. It is already worth $200 a month or 15 grand at a one-time purchase. And the software is improving dramatically. Point number one, Tesla has a demand problem. And because of what the margins look like, because they were under the estimated 20% by 0.7% that quarter, they're saying Tesla has a demand issue. Wrong. Margins will fluctuate, and these tax credits are only going to help. Not because people don't want to buy the product, people are experiencing difficulty making those monthly payments. Margins will continue to be industry leading and, quite frankly, mind-blowing. Two, the competition is coming. Everybody's getting these tax credits, so Tesla's going to experience more competition. Wrong. Evidence to the contrary is true. Even when tax credits were available and they weren't available to Teslas, I bought my Model 3 and didn't get a tax credit when I could have easily bought a Nissan Leaf or something or a Chevy Bolt and gotten a tax credit. That's not the reason why I purchased a Tesla. And if anybody does their research, they're going to want the best vehicle on the planet with the applicable ecosystem. You got Tesla supercharging, you got solar generation, battery storage. The ecosystem is in place.
George, when it talks about the potential here of FSD, there was talk earlier this week, Elon Musk saying that he would be open to licensing the technology. Of course, there was also the partnership with Ford last week for its charging network. Do you think that's a smart move here going forward for Tesla, just in terms of licensing some of the technology that they have already perfected at this point?
Look, it could be. We'll have to figure out how that works and what kind of price they offer. We actually initiated today on 2 companies in autonomous driving. We called our report AI for the streets because ultimately these are AI companies, right? Not only is Tesla an AI company, but a company like Mobileye who initiated on, or Aurora. These are really, really interesting stories that create a product that has a lot of AI embedded in it. So if companies really want to move forward and have strong autonomous offerings, they have a couple options. And on the passenger side, right, today, they could potentially do something with Tesla. We'll see how that works out. They could also use something from Mobileye. And over the long term, maybe even something from Aurora. So they'll have multiple options. But on the passenger vehicle side specifically, we think Tesla is in a very, very strong position, as is Mobileye.
You talk about the vertical integration that has really been key to Tesla's success. And, I'm thinking too, as a driver, the benefit of having something like a Tesla is the infrastructure that is already in place for those Tesla drivers. as we see more and more offerings within the EV space, how much of that becomes a real advantage to Tesla? I mean, it already has been, but now that we're talking about affordability for the car, to what extent does that become an additional lever, additional reason for drivers to say, look, this is why I'm going with Tesla?
That's a great question. So what we've seen so far is that through vertical integration, Tesla has been able to offer vehicles at a low price and still make money on them. What we'll see in the future, and what we're seeing from a company like Rivian, for example, is that what vertical integration does is it allows features to be downloaded over the air. And it sounds like it's easy, right? We all have it on our smartphones, for example. But in order to enable real over-the-air features, like something Rivian offers called camp mode, where it literally changes the suspension of your vehicle, you have to be able to write software at a system level. You have to be able to write the braking software, the motor software, and all this stuff that today a company like Ford, for example, buys from hundreds of independent vendors. As a matter of fact, there was a recent interview with Ford's CEO where he described this very phenomenon. So these companies have to be built up from the ground and have to embed a Silicon Valley, a software type infrastructure and culture that's really hard to do when you're re-engineering your company. And companies like Tesla and even like Rivian have done that from the ground up. They started with a clean sheet of paper. And so that kind of that DNA allows you not only to have low prices, but also really great feature sets.
Bing bong. Tesla infrastructure isn't the reason why I bought my first Model 3, just because it was a badass vehicle. The amount of recurring customers, coupled with customers that aren't even aware that electric vehicles are going to be the next big thing, Tesla is poised to capture a huge share of the market. But now let's get into the amazing rally of Tesla stock. Will it continue? Are we headed for that pullback that I predicted that didn't happen? Yep, your boy made a bad decision. The 215 put, crazy. Let's go ahead and see why that is.
Gains. Let's bring in Roth Capital's Craig Irwin. $85 price target, neutral rating on the company. What's leading to this surge that we've seen lately, Craig?
So there's two things going on. The first, I would call out that, Tesla's obviously, a very successful company in EVs. EVs are inevitable. They created the market, high quality. It's a darling. People want to own it. So any good news, they want to buy a little bit more, and it's a positive trade. It's a momentum trade. Second thing is, and I think people are misreading this, but on June 3rd, we had the announcement that they would future sales of the Model 3 rear-wheel drive vehicle, right, which is their highest volume vehicle, is going to be eligible for $7,500 in federal credits under IRA versus $3,750, just prior to that, which was on for a space of a number of weeks. Obviously better subsidy levels are good, and there's been kind of news that Panasonic wants to increase its battery manufacturing in the U.S. In the space of these recent days. But it appears there may have been the first detention of batteries coming into the U.S. under UFLPA. And that would be a major complication. And there's also,
what does that mean?
So December 2021, UFLPA was passed. It handles the sensitive issue of forced labor in product content and certain Chinese regions. So it's the policy to exclude all products made with forced labor. And CBP only did their first enforcement in June of 22 for solar, right? My colleague Phil Shen did some really impeccable work around this. This looks like we now probably have our first enforcement action for batteries. And sort of the person raising the flag, his name is Richard Mujica. He was intimately involved in the first Chinese OEM to have this issue for U.S. customers. So, there's going to be a lot of changes. I don't know if it's good. I don't think this is. I think this
Craig,
is bad.
Craig, listen. When you come on with us, I always respect your obstinacy, but $85 price target still. I mean, what's got to happen for you to be right here?
I'm going to be right. I'm going to be right. So remember,
how do you know you're going to be right? What are you going to be right about? Tell me.
There's about 100 EVs that are coming to market this year, 100 new EV models, and they're going to pressure Tesla significantly to the back end of the year, just like we saw last year, right? Tesla's valued at a massive premium to Toyota, sells a tiny fraction of the vehicles. They don't have anything that Toyota doesn't already have, right? So what they have is, a focus exclusively on EVs. And they have a story around robo-taxis, but that story is nothing but a story. We're not seeing any taxis anytime soon. Other people could take as aggressive positions in the technology. I, like many, just find it a little bit scary when you have these apparitions in front of you causing false braking, in the FSD system. So, it's a story stock. It's a story stock. People love.
But the story's been out there for.
First and foremost, Craig Irwin is a notorious bear against Tesla stock. They bring him on. They want to ask him why Tesla stock is surging. We got 9 straight days of positive activity, probably going on 10, depending on how Friday goes. But first thing Craig decides to talk about is forced labor, associating Tesla with forced labor just by proximity, right? There's no reason for him to bring this up, like none. But he's concerned about it in regards to Tesla's winning streak. I don't get that. 2, I can only imagine off camera the analysts are like, what the f*** are you talking about? David Faber comes in and questions the man's price target of $85. What do you need to do for this to be true? It will be true because I said so. Look, Craig has wonderful things to say about the company. He's just not a believer that the automotive industry is headed for a cataclysmic disruption. Tesla has nothing that Toyota doesn't have. I can tell you one thing that Tesla has, and that's selling EVs profitably. The future is EV, simply because Tesla is leading the way. There will be other EV players. They will capitulate and adopt Tesla's charging system so they can take advantage of the vast supercharging network that Tesla already offers. There will be some people that survive, but they will be hopping on the backs of Tesla into that new future. Toyota is so far behind, it's laughable. And yes, FSD isn't perfect, but neither is ChatGPT or any of the generative artificial intelligence that are out there right now, but it still is amazing, and it's going to improve human productivity tenfold. Tesla isn't there now. There is phantom braking. It does have problems with construction, but it's still learning. And once it gets a grasp of those little nuances, it will be safer than a human by an order of magnitude.
Joining us now is Future Fund portfolio manager and managing partner and widely followed Tesla investor, Gary Black. Gary Black, good to have you back. And I'm going to read a tweet. I'm going to read a tweet, so forgive me for looking at my phone, by a guy named Gary Black. You might know him. He's you. June 5th. Tesla now trades at a higher forward multiple, PE, than NVIDIA because Tesla's calendar year 2024 EPS have dropped 26% year to date as a result of the price cut. Sounds like you're not a huge fan of Tesla's valuation.
Oh, no, we're pretty bullish. And we think this rally has more room to run. It's very reminiscent of what happened in 2020. Remember when they were bringing the Model Y out? And that's news. And what it did was it drove a lot of people to Tesla showrooms and to the Tesla website. We have something very similar coming in the fourth quarter, which is Cybertruck. And the Cybertruck will be, it'll be a great news story. There's 1.3 million pre-orders, and we think it's going to do what Model Y did in 2020. So we have a price.
So you're not really reminiscent to those times back in 2021. The Cybertruck, I don't think, will move the needle as much as the Model Y, but who knows? But I think there will be other compounding factors. There will be information about the next-gen vehicles, and you still have the capabilities of FSD. My biggest trigger for the stock is when Elon announces that FSD will have a 1-month free trial. Once that occurs, that's lights out, people. We're going to see a massive adoption of the full self-driving software, and all of that deferred revenue will be applied to Tesla financials. It's going to be a big day, and the stock is going to grow an extra pair of legs when it starts flying up.
So maybe I misread your tweet then, Gary. You were comparing the forward valuation to NVIDIA, which, by the way, is a very high valuation company, very fast growth as well. Yes. You're not worried about 46 times earnings because you believe that truck, assuming we ever actually get it, will be able to raise earnings and thus compress that multiple?
Look, at 46 times, you got to compare that to about 37% long-term growth in earnings. So it's got a PEG ratio about 1.2. That's similar to Google. That's similar to Meta. You compare it to like Apple. Apple's got about a 27 PE. It's growing about 10%. If you think about NVIDIA, NVIDIA is about the same multiple, and it's growing at less than that, like 25%. So we think, if you think about why Tesla has moved up so much in the last, as you said, the last 10 days, you got a bunch of things. One, people are thinking the second quarter gross margins are going to bottom. You haven't seen any more price cuts like you saw earlier this year. So that's important. The China volumes have been very, very strong. Elon is clearly more focused on Tesla. He hired somebody to run Twitter, Linda Yaccarino, and that'll allow him to get out of Twitter, and Twitter will turn cash flow positive sometime this year, and that'll allow him not to have to put any more money into it. But the big thing is going to be Cybertruck. Cybertruck, if you see it, you either love it or you hate it, but it's going to drive news to Tesla. It's going to get people to go to the website. It's going to get people to go to the stores. And just like in 2020 and 2021, you saw volumes explode in 2021 at Tesla. It was up about 87%. We think volumes next year, meaning 2024, will be up over 50%, where the street's looking for up 27%. And that's what has to happen. You got to beat expectations. So we're a big fan of it. The other thing you should just pay attention to is all the analysts have price targets below where the stock is today. The average Tesla price target, about 50% are bullish, is about 192. The stock hit 227 today. You look really foolish as an analyst with a buy rating and your price target's below where the stock is. So over the next couple of weeks, as people put out their second quarter previews, you're going to see a rash of price target increases as people catch up to where the stock is. And that'll be good for the stock as well.
All right, that was a lot. But from what I caught, he mentioned Twitter, how people were concerned about Elon Musk dividing up his time with Twitter. I ain't really worried about any of that. I'm more concerned with whether or not Elon Musk sells his shares of Tesla in order to continue funding operations for Twitter. And the other thing he mentioned is also fairly true. There will be tons of analysts going on mainstream finance media updating their Tesla price targets because they have no conviction in any fair value estimate they have for the company. Why, do you ask? Because they don't know what Tesla's fair value is. It's either up or down 50%. I have more respect for a guy like Craig Irwin, who has Tesla at an $85 fair value estimate. Is it totally wrong? Yes, but there's a matter of ballsiness. Maybe he's using it to stay in the media because his price target is so low and he wants to get roasted by David Faber. I don't know. I totally disagree with how he gets to the $85 valuation. But his quote of Tesla doesn't have anything that Toyota doesn't have is quite frankly damning. Be on the lookout, especially if Tesla closes higher on Friday. When you're watching this, next week you will see a rash of analysts updating their price targets. In my bear case, worst possible scenario, that's if there's no real monetization of FSD, no energy, no nothing. We're just talking about the automotive business. 364 is my bear case. If you want to take a look at my base and bull cases, feel free to join Patreon with the link in the description. In review, what we have is the Model 3 qualifying for the $7,500 tax credit. If you live in a state that gives you EV tax credits on top of the federal ones, you need to be thinking seriously about purchasing a Model 3 and replacing that internal combustion engine. Tesla stock is trending higher. Does it still have room to run? I don't know, but I'm not placing any puts anytime soon. I'm going to take a wait and see approach, but I'm getting that 2021 vibe, and that's all I'm going to say. And here I am thinking it would be a slow news day. Think again.
Mary, it's Melissa Lee at the NASDAQ market site. How do you share the cost or revenue of the charging network with Elon Musk, with Tesla? And does this mean that you might be partnering in the future? Because Elon Musk has tweeted just recently on the heels of the Ford announcement that he would be willing in the future to license other Tesla technology like full self-driving and autopilot.
Well, I think from a full self-driving perspective, General Motors has Cruise, and we're already operating level 4 autonomy in 3 cities, with 2 more being added. But, of course, we're going to always look for ways to be more capital efficient. And this arrangement alone, this collaboration that we're doing, nearly doubles the amount of chargers that our GM customers will have access to. And frankly, we think we can save up to $400 million in the original $750 million that we allocated to this, because we've been able to do it faster and more effectively. And we're really looking for ways that we can be more capital efficient as we go forward. So if there's other opportunities to partner, we're going to be very open to them. In addition to this collaboration with Tesla, we also have a very important collaboration with Honda as well. So, we're demonstrating that. We're going to continue to do that, because I think being capital efficient in this environment that will allow us to get the best EVs out to the market is crucial in this transformation.
And there you have it, folks. GM is following in Ford's footsteps, capitulating, bowing down to Tesla's superior supercharging network. This means that their future models will more than likely have the NACS connector, leaving the CCS connector pretty much obsolete. A truly bullish signal would be Electrify America, EVgo, all of them converting the NACS charger and admitting defeat. Maybe they can learn something from Tesla and how they do their charging networks and just be like, all right, they won. They beat us there. We're going to help out, and we're going to do the best we can to make sure the transition to electric vehicles is a positive one. And Cruise, level 4, I don't know if you've seen this. This stuff is ridiculously bad. It is a party trick that's acquired level 4. Cruise is operating in 3 cities with level 4 autonomy. Well, that just means that they're geo-fenced in a particular area and have no general purpose with that software. It is a dead end. FSD, you could drop a Tesla anywhere on Earth and it would perform better than Cruise, Waymo. Pick your autonomous driving software. If we dropped it in the middle of Ohio, Tesla's FSD would run circles around anything that Waymo or Cruise has to offer. Heck, they're doing it even in the cities that they're licensed in.
Mary, I've got a question for you regarding Twitter. When you tweeted about the spaces that you're going to do with Elon today, that was the first time that you were back on Twitter since October 27th, I believe the date was, when Elon Musk took over. At that time, GM also discontinued advertising on the platform. Are you back on Twitter? Is GM going to continue its advertising?
Well, we've been on Twitter, especially for our customers, as they have questions, as they have comments, as they have issues. So we've been on Twitter all along. We're in the process right now of reimagining marketing. I think it's known that we are in the market to bring in a new head of marketing. And I think that's a good question, and will be one of my first questions when this new person joins the GM team. So I definitely think it's possible.
Mary, thank you for joining us today. GM
CEO Mary Barra, give the best political answer so that she doesn't do anything to jeopardize the stock. But what she should have said was advertising is actually probably not going to help us, considering we need to put every available dollar in our transition to electric vehicles if we want to see GM exist after the year 2030. But she can't say that, or GM stock would plummet off a cliff, right? Everything's fine. Don't worry about anything. We're doing fine. We're doing just fine. Nobody's eating our lunch. We're fine. Yeah, we partnered with Tesla. Yeah, we went on our biggest rival social media platform to announce it. Yeah, we're not bent over a barrel, right? Well, that's all I got for you. Be easy.